KKR is famous as the subject of the 1990 book Barbarians at the Gate, but they're anything but barbarians to the shareholders of Pacific Brands, who have watched in misery as their shares have fallen 80% in 4 years, while the rest of the market has fallen 30%. The price that KKR is thinking of giving them is not known, but the share price today leapt 14% in anticipation. Pacific Brands is best known for Aussie icons like Bonds, Burley, Yakka and Sheridan, perhaps soon to be Aussie no more. The market as a whole got a bit of a fillip, although that was mostly because of the usual ups and downs that markets do. Resources stocks and banks all put on around 1%, and Qantas and Boral had pretty big days. And that was after patchy performances on global markets overnight, including a fair bit of gloom in Europe, mainly about Greece, which seems to be unravelling again. The Chinese market had a big session today, up more than 2%, despite the weakest growth in exports from China in 10 months. Imports were even weaker, so the trade surplus expanded by $2 billion. The Australian dollar jumped from below 102 US cents this time last night to more than 103 tonight. Finally, a couple of perspectives on the share market. First, the Australian All Ordinaries in the 4 big collapses and recoveries since 1900, including this one. This was the equal deepest, worse than 1929 and the same as 1973, and this recovery is now the weakest of them all. And this chart shows the price to earnings valuation of all the developed world share markets based on profit forecast 1 year ahead, which is how most analysts value stocks. As you can see, it's been a 12-year global bear market, cutting the average valuation of shares by more than half. And that's finance.